Today we are talking about the pound as it tests a critical support level in the DXY Fumbles at 100.2 that we've discussed in recent videos. So I'll have all the details in today's video, including a couple of scenarios to watch as we head into June. And this video is sponsored by XM Group, so if you want to trade Forex, commodities, indices, and crypto, be sure to sign up with them using my link, and for a limited time, when you deposit $1,000 or more, I will give you lifetime access to our VIP group. That includes my trades in real time, weekly VIP-only videos, and also my trade ideas that I put out every week. You're also going to get access to the 28-video course that I just launched on how to trade fakeouts. So looking at the pound, guys, on the daily time frame, we have talked about this here, including in yesterday's video where we talked about 134.30, this level going back to September of last year. So this has been a critical factor for the pound for some time now. You can see it was the April high right before a 300 pip sell-off, and we got the breakout late last week. Now, what I've talked about in recent videos is that this right here could become a failed breakout. However, what is critical here, and I talked about this yesterday as well, is that you have to respect what is on the chart. So even though this breakout could fail, we have to respect what's on the chart. And what's on the chart right now is 134.30 as key support. And we can see that today. Okay, the market tested this level and so far is bouncing, turning back to green here with about, 5 hours left to go in today's session or so, or about 6 hours left in today's session. So we'll see how this closes, guys. But, at the moment, the market is holding above this key support level. And this is, again, what I mean by you have to respect what is on the chart. So far, the market is above this key support level, meaning that this uptrend is intact, higher highs and higher lows. And levels like 136.30 are also exposed here, these resistance levels, as long as the market is above 134.30. We can also see where the DXY, overnight put in this crazy gap up here. This was a report that came out where I believe it was the Supreme Court that stated that Trump is not doesn't have the authority to impose tariffs. Okay, and this caused the market to go a little crazy here. Stock futures were up massively overnight because of it, and they've sold off since that time. But you've got the DXY here gapping up from Wednesday's close into Thursday's session. So it gapped up right here into 100.2 to 100.4 that I talked about in yesterday's video. So if you saw that video, you knew that this right here was going to be resistance. And sure enough, we are getting the DXY selling off from that area. So this is also the area that I have discussed in recent videos as the one that would have to break out, that would have to fail in order to see the DXY climb higher. As long as this is intact, there is no reason to be bullish on the US dollar, okay? And this is what I mean, and hopefully you guys have seen those recent videos to know that this was not the time to be getting bullish on the USD, okay? So as long as this is the case here, we do have a downtrend in place, and there is no confirmed breakout for the US dollar. And at the same time, again, we know that the pound is coming there into 134.30. All right, now let's run through a couple of scenarios here for the pound that could, play out in June. And I'll talk about the key levels to watch and also some potential targets based on those scenarios. And by the way, guys, if you are enjoying this content, be sure to smash the like. It takes me hours to make this content, a few seconds to like it, and also be sure to subscribe because I do have videos coming out like this every single day. So looking at the pound at 134.30, this is going to be the hinge, for the pound as we head into June. In other words, it really comes down to this. It's as simple as this. If the market's above this, the pair is above this level, then we have an uptrend. We have the market holding above here. It looks constructive toward levels like 136.30 and 137.50. And the way that I got those levels is if we go all the way back here to the price action back here in 2022. Okay, so early 2022, you can see that we've got these highs through here at 136.30 and 137.50. So, very simple, right? This stuff isn't rocket science. It's always, pretty simple. And you can see that we've got those highs back there. That's how I come up with those two levels. So as long as the market is above, 134.30, then we do have the potential to see the pound come up here and test some of these higher levels. Again, we have an uptrend here and we have to respect what is on the chart right now, not what we think might happen tomorrow. Now, scenario two, and by the way, before I go on to scenario two, it doesn't mean, when I say respect what's on the chart, that doesn't mean that you have to go out and buy the market, okay? It doesn't mean that you're looking for buys down here. Now, if you did, then you're up a little bit and that's great, but you have to follow your rules, right? You have to follow your trading style. So when I say respect what's on the chart, what I'm saying there is respect this as key support, not necessarily go out and buy it, but you have to respect this as key support, okay? Now, scenario two, of course, would be if 134.30 fails, okay? So if we see the market okay, the pound get below here on a daily closing basis, this up here becomes a failed breakout. And we have that potential for a move down here towards some of these key levels, including those imbalances that I've talked about down here in this area, okay? And right now, we really don't have too much confirmation one way or the other. Yes, we have the market holding above here, so we have to respect that fact. But, in my opinion, it's going to take a day, maybe two. I at least want to see where today closes before I even think about acting on anything here. And that's especially true with how crazy markets have been. All it's going to take is Trump to come out and say something and the markets could reverse, literally within seconds. So I'm not in a hurry to trade this. And like I've said previously, guys, my ideal scenario, it doesn't mean it's a likely scenario, but my ideal scenario would be to see this level through here fail, okay? I would love to see this fail only because my trading style is fake outs. And if we get a close below 134.30 on the daily time frame, that would confirm a fake out, and that would be a high probability setup for that move down here towards some of these key levels. But again, we don't have that. I have to respect what's on the chart, and right now the market is above key support. Okay, so I have to respect that fact, but again, my style calls for, a close below here and getting that short setup, but we don't have that yet, so I do nothing here. And really, guys, I want to touch on that a little bit too. This comes down to something very simple, right? If you have your trading style set, you have your rules set, something like this comes down to something as simple as you either get the setup or you don't, right? If the pound were to rally from here, respect this level, come up here, test this level, test this one, even test this one, I don't care about that, right? Because I'm not a trend trader. I know my style of trading and I'm not a trend trader. So I don't care about any of this. All I care about is if we get a close below here, because I know that would line up with the way that I trade. And that's what it comes down to. If we get this right here, I don't care. I move on to something else and trade, something else out there, because if you're watching 10 or more markets, you're always going to have some type of fake out there. Within a week, you're typically going to get at least one or two trades, per week. So again, I don't care if the market does this. A lot of people, if that happens, and I'm calling, or I'm saying I would love to see this, people say, oh, you were wrong. You're a terrible trader or analyst. And the bottom line is, I don't care. I don't care if we do this right here. All I care about is if we get this, because this is my proven style of trading that I've used for years. So hopefully that makes sense. I didn't want to go off on a rant there, but I do think it's helpful to kind of know how I look at these markets, because I do think that sometimes it gets a little lost in translation, okay? So that's the bottom line for the pound, guys. Scenario one is hold above here. We get that continued rally up here towards some of these key levels. Scenario two would be to get that close below here, which again is my preference only because that's the way that I trade. That would open up some downside targets here for the pound, including this imbalance down here in this region, okay? Now for the DXY, because that's also going to be a factor if you're trading the pound or the euro, again, 100.2 up here toward about 100.4. That's going to be the critical area, resistance area here for the DXY that the market would have to get above in order to turn higher and target some of these higher levels. And like I've said recently too, I would personally love to see that. And again, it just goes back to the fact that I love trading stuff like this, right? If we were to get the close above here, then I know this right here, okay, this recent breakdown, this would be a high probability setup for that move up here towards some of these higher targets. But it doesn't mean that I'm longing the US dollar right now, because I'm not going to long the market as long as it's below this area around 100.2 to 100.4, okay? And that's the bottom line. It's very simple, right? We have this trend line up here. The market is below that. There's no reason to be bullish, okay? Now, the other reason I would love to see this, if it did happen, if we got the breakout here, whether it be today or tomorrow or next week, is because you have areas like this back here, okay? And this is similar to that imbalance we talked about in the pound. So we discussed this area up there around 106 before in the DXY, but what you'll notice here is that we had a very aggressive drop back here from the pound, and we did not see a retrace into this area. So what that means, and let me explain this a little bit, the reason that this is significant is because one of a market's primary jobs, okay, and we're talking about market makers here, is to have as much liquidity in play as possible. So if you look at this here, okay, this drop, you have to consider that this was so aggressive and we never got a retrace into these candles that there were orders up here, okay, people trying to short, and not just people, right, institutions too, trying to get into this action, and they were not able to get in. What that means is that there are open orders up here, okay, there are resting orders up here, resting liquidity in the market. And if a market's primary job is to have as much liquidity in play as possible, because if you're a market maker, that's literally how you get paid, right? If that's your primary goal and you know that there is resting liquidity up here, wouldn't that be a target for you? And it often is. And that's exactly why I like to pay attention to areas like this back here where you get a very aggressive move and you see a very shallow retrace into that. Okay, it doesn't mean that we will come up there and test it. Although eventually I think that we will, though, given the range-bound conditions that we've seen here over the past few years. But, it doesn't mean that we will come up here, but I would love to see that confirmed, that setup confirmed, because this would be an ideal target for the US dollar. All right, guys, so I don't want to go on too long, but I did want to clarify kind of how I view these markets. Before the pound, guys, it all comes down to 134.30. You can see where the market is bouncing, although it is coming off a little bit here off of the session high. So for me, guys, I am going to stand aside, see how today closes, see how tomorrow closes as we move into Friday, and see what we get here over the coming days. Be sure to keep it locked in here, guys. Smash the like button to show your love, and subscribe to the channel because I do have videos coming out like this every single day. Trade well out there, and I will talk to you again tomorrow.